Let's bring in Ed Snyder now, equity analyst at Charter Equity Research. Ed, it's been quite a move. I mean, we were down, we had a 130 something on this stock, and then here we are knocking on 150. What do you think of it here?
Well, I mean, you obviously get a rebound with the rally in the Dow and the NASDAQ. Almost every one of our tech names is up strong here, and it's been a long, hard road down. So I think this is a small correction. We'll see how it chases out in the long term. But I think Apple, as with most of the handset companies and the companies that supply them, have to really be concerned about the long term. Second half of this year and the beginning of next year, with inflation and the U.S. GDP declining and China demand dropping off because of lockdowns, it's not going to be, I don't think, a pretty picture for the rest of the year.
How significant is the 150 level, if at all, in your mind?
Well, at some point, this looks like such a great value, especially for a blue chip name like Apple. There's really not a lot of risk. The biggest risk is that you're going to see a further fall off. Eventually, all the problems we're facing will be passed, and Apple's not going to be going anywhere. Same thing for some of their suppliers. In fact, if you go back to the global financial crisis in 2008, a similar thing happened with Nokia and its suppliers, and they traded off very heavily. And within 2 years, they were up 300-400%. So, I'm not calling a bottom or a rebound, but if you're looking at the fundamentals of the businesses we're talking about here, it's not really a huge risk to be buying at 150, 130. It's just how much risk how much downside you really need dirt before the turnaround occurs.
Yeah, Mike, I mean, the 52-week low on AAPL is 123. I know people watch it closely for obvious reasons, and we typically ask the question, how can the market find any stabilization if Apple can't? What was, and remember, lost the title of the largest market cap company. It is back above $2 trillion right now, so it's been a really nice recovery.
Right. I mean, the market certainly can't have Apple fall apart and perform. The indexes are just too skewed in that direction. But, Apple, in a sense, has done its job in retaining the vast majority of its two-year gains, even in this pullback. So, yeah, it went down, 25% from a high. I just wonder what it'll mean if the market itself is getting its legs back under it. It would surprise me if Apple and stocks like Apple are the leaders for any sustained period of time. That was the last story of the prior couple of years. It's also, Apple's kind of like your wartime consigliere. When things get bad, you rely on it. But then if peace breaks out in the market, I think there's going to be, other faster moving stuff that maybe is going to take the floor.
So, Ed, you do start to hear that, let's say energy, for example, great week, and the stocks have had a great run. And maybe for that reason that you are going to have money come out of that space and go into spaces like growth and like tech, which some are trying to declare have bottomed, and that could give that next leg higher. What do you think?
Yeah, I think that's true. I mean, you've had a kind of a debacle over the last 8 to 9 weeks in tech. It's been down consistently. And so everybody's looking for yield. And if you believe that there's a bigger recession coming and it's going to last for a longer, you're looking for some sort of, hedge on that. And commodities and energy are probably an excellent bet given the current situation worldwide and the U.S. domestic economy. So I think there is something to be said for that. I think that is true.
Okay. We'll talk to you soon. Ed, thank you.